Of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for the Futures Hour for TFNN. If you have any questions, it's 877-927-6684. And on today's show, I wanted to cover a couple of little market dynamics things. One particular about parabolic moves like we're having right now in Apple. I have probably gotten more questions about this than anything that I talk about, and I don't really get involved with Apple. But, you know, I will talk about it a little bit. And one of the things that of course, this being the futures hour, I want to spend almost all the time on the futures because they're interrelated to, you know, the economy and everything. But the overall dynamics of a market like you have with Apple right now, I mean, this has been played out in history forever, folks. I mean, this is going at about a 90-degree straight up turn. I think it's about 82% move. And we've had these in Google before. We've had these, a lot of them in 2000 when everything was going parabolic. They all end the same way. They all end badly. You know, Google dropped more than two-thirds of its price after it made its first high. And so, you know, you just have to be prepared. You don't know when the top is going to be, but, you know, when it does finally occur, you know, you're going to have to, you know, realize that this is nothing more than, you know, Isaac Newton's second law of motion. For whatever, you know, what prices go up, you know, prices will come down. You know, that's his second law of motion. So anyway, this is what we're looking at. If you go into the Tiger TV, you'll see a chart of CTX, which was a housing stock that peaked up around the $100 level back in 2005 and went down to $5 a share. If you were to look at this chart and superimpose the Apple over it, they're almost identical. I know Apple is not the housing stocks. It's a question of the psychology behind the market that is going on at the time, because this is what these markets are based on. They're based on fear and greed, and you know, nothing more. And the news that you get out there, the previous guest, Jim Rohrbach, was on, and you know, and he mentioned about these people that are, you know, they're 22, 23 years old, you know, just youngsters that, you know, don't really have a lot of experience, and they give their opinions, and they're entitled to do that. That's what the whole market's all about. But you remember, you're the one that has the responsibility to do the work, and you're the one that has the responsibility of putting the trade on and seeing whether you make money or whether you lose money. So just remember that. Parabolic markets end the same way. I don't care whether it's, the CTX house. I don't care, CTX stock. I don't care if it's Google or Apple. They're all going to end that way. Now, the question is, you know, when the top is, I don't know. It hit 600 today, you know, which is no big deal, just like 500 was no big deal. So that's, you know, really you just have to wait and see, you know, when it happens. And if you want to buy Apple, wait till you get a really good pattern to buy it. I mean, we had a terrific pattern to buy Apple at 385, you know, and it went, you know, straight up. And, you know, I'm not saying that I certainly wasn't in it, but, you know, we talked about that on the air. I remember it very distinctly. Now, the next thing I wanted to talk about is an entry technique that you can use just about every day. And this is true of commodities. It's true of stocks or whatever. This is known as a 135 pattern. It's nothing more than a corrective pattern. In other words, you don't have to try to pick the bottom in anything. All you want to do is wait and take the low of the previous day and then wait for the first rally and then buy the retracement. What I've done in Tiger TV is to post two of them today. The gold and also the treasury bonds, and both of them came down to 61% retracements, and both of them have continued up and gone, you know, much higher on the day. Now, this is just a way of entering the market. You don't have to, you know, try to pick the bottom, you know, day or the, you know, the actual low of the move. Wait for the first corrective move, and that's the one that you'd want to be, you know, want to be watching. Now, I know many of you like to trade the E-mini S&P. And that's another one that did exactly the same thing today. It came into a little bit high this morning. It backed off just a tiny bit, and then lo and behold, it came down exactly to the 61% retracement at that 1388 level, and then has proceeded to move higher, ever since. Now, this is nothing more than a little retracement pattern, and it works the same thing on the reverse side. In other words, if you wanted to sell something, let's say you wanted to sell Apple today, you have you've got a harebrained scheme that you wanted to try to pick the top on Apple. You figure out what the high of the day is, you wait for the pullback, and then sell the 61% retracement. And what's good about this pattern is your risk is if it makes a new low or a new high, depending upon whether you're long or short, you certainly want to be out of it. That means it's definitely not working, and you don't want to have anything to do with it from that point of view. Now, since we're talking about this particular pattern that we're looking at, what I'm going to do is we've been watching natural gas for a very long time, and the reason why I think it's important that we take a look at the natural gas, and if you'll give me a second here, I wanted to post it into Tiger TV, but I want to emphasize the double bottom that occurred, because on the natural gas, we have made a slightly lower low than we made, way back on the 23rd of February. And then we had a, very, very strong rally. Well, if you look what happens over the last 3 days, since the 13th of March, this is the 15th, so it's 3 days, Monday, Tuesday, Wednesday, Thursday. The market made a new low, much lower than it did on the 23rd of February. And that basically took out the stops, if there were stops there, supposedly. And then we've had a little bit of a rally where we took out yesterday's high, and then today we pulled back to a retracement, and now we're moving up a little bit on the day. So the only thing that you have to do here is, if you wanted to buy this, you can buy this with a stop below the low of Tuesday. That's really all you have to do. Now, I want to get you guys to remind what happened back when gold and silver made their bottoms down around the secondary bottoms around 1534. We did the same thing in gold. We made a lower low by just a tiny bit. Silver made a lower low by just a half a cent, and then they had these huge rallies that took them all the way up to the 61% retracements of the whole move. So later in the show, we're going to talk about that, and I'm going to show you that same pattern, so that when you see it here in natural gas, that if you want to be a buyer of natural gas in this level, then your risk here is very, very small. It's only about 6 cents, and that's not a whole lot in natural gas. So this is one of the things that you want to look at, is if you're looking for these double bottom patterns to form, and then you look for the first little retracement after that, and that's really the best way to enter the market. And this is what we're looking at as far as what we want to keep our risk at a very, very small level. And that's the best part of what we're doing with this, is to try to control risk. Steve Rhodes does a great job with his program on how to handle the money management part of it. And those of you that are having trouble with that, I would really recommend Steve's program. It's really quite good. Now, there's several things that we need to cover today, and I want to get into the agricultural commodities right away, because we've been watching the corn market. It's done pretty much what we had expected it to do. It's still moving higher. All the rest of the commodities, crude oil and all the other things are looks like they're in serious trouble. But in fact, the corn is holding up relatively well, and soybeans are actually, going very strongly to the upside. So all of these things are telling us, that we are, still in a bull market, in the grains, and it doesn't look like, nothing's going to change that from starting right where we were back in December. So we'll have to just see where we're going. But it looks like corn's going to get up at least another 30 or 40 cents up into the $7 per bushel level. Now, this was the same pattern that we just talked about in natural gas. You're seeing the same pattern on the daily chart in corn. If you go back into Tiger TV and look at it, you'll see the low we made on December corn back on the 17th of December. Then we rallied up into early January. We came down really hard because of a very bad crop report, and the market stopped exactly at the 786 retracement, and at that point, it took off and has now been up, almost almost every week, since that time. So it's been up about 6 weeks. So this is another example of that same pattern that we talked about. That's just called the 135 retracement pattern. And actually that number, the 135, came from Clayton Brokerage. That was an old-time brokerage firm that was absorbed back in the early 70s by Lynn Waldock. But Clayton Brokerage was out of St. Louis, Missouri. It was basically, I'm having a mind warp here. Roy Longstreet. Roy Longstreet was a great soybean trader back in the 50s and 60s, and he basically started Clayton Brokerage in St. Louis, Missouri, and it was a very prominent brokerage house in the early 60s and late 60s, and then was taken over by Lynn Waldock. But that pattern was also one that Roy Longstreet also used, and the part that the fact that it works the way that it does, it's really amazing. It allows you to get in at a very easy way to do it, and you don't have to have anything really fancy to look at. You're not in this place where you're looking at any particular turning point as far as if you have an oscillator that you're waiting to see. What you can do is you can just literally just buy the 61% or the 786 retracement and go with that. Now the question arises that someone just asked is that what about the difference between the 61% retracement and the 786 retracement? And the difference is that if the amount of money that you want to risk is too much between the 61% retracement and the 786 retracement, you have two choices. One, you take the trade at the 61%, and if it doesn't work, get stopped out with a small loss and try it again at the 786. So you either have two small losses or you wait to the 786. That's what your choices are going to be if you're going to be looking at this particular pattern. Now, the corn being the largest, growing crop that we have in the United States, it's very important, and we are now in the process of, taking a look at soybeans, and the soybeans have been much stronger, and the beans are actually moving up towards the 786. They're ready to complete a Gartley up at this level. We had a bearish Gartley also at the 618. There was an example at the 1322 level per bushel. It stayed there for 3 or 4 days, and then it continued to go higher. There would be an example of this, the not being able to stay in that trade because you want to take a shot at it at the 618, and then also take a shot at it at the 786. That's the main thing that we're looking at here, with the soybean market. The first chart that I posted into Tiger TV today was the DBA for the ETF for all the commodity, or most of the commodities that we look at. It's I'm not really happy with ETFs, but that one does follow the market relatively well. It's heavily traded, so you're able to look at it. Now, if you take a really close look at this, you'll see that it's had a bullish. We've got to take a little break here. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and if you have any questions, you can call in 877-927-6648. This is the Commodity Hour. I'm going to spend the last part of the Commodity Hour talking about the bond market and also a little bit about the stock index futures. Those of you that go into Tiger TV and take a look at this, what we're looking at right now is we talked about early this morning about the support at the 1388 level, which was nothing more than a 61% retracement of the low to high yesterday. And then, what we're having now up at this 1396 level is we're completing another AB equals CD pattern, at that particular point. But, frankly, it can go all the way to 1400. There's nothing magical about it, but we do have a Bradley date today, so it's going to be really interesting to see what happens. We're in a window now, starting today, that goes all the way through the 22nd of March, and we'll see what happens. This is very similar to what happened in March 2009, but it's just reversed. So we'll have to wait and see, what really happens. Now, the other thing that I would like to talk about now is the crude oil, because we are at a very critical level in the crude oil. We have completed, a major bottom down there at the $75 level. That was a 61% retracement on the weekly charts. And then we had a huge move up. We made an AB equals CD pattern at the 382 level at $94 a barrel. actually $93.50 a barrel. Then we made another Gartley pattern buy at $95 a barrel. And what we're doing now is we are completing another Gartley buy pattern that's going to come in right about $100 a barrel. That'll be the 61% retracement of the low from February to the high we made in March. And then it's making an AB equals CD pattern, to the downside. And that's telling us that we are getting very, very close to a pretty good buy. Now we're only $4 away, $4.50 away from this, so that this can happen very, very quickly. So all I'm saying is that the trend is still up in this. It looks like it certainly wants to still go higher. And this is what we're looking at. We do have a price objective, that if we above 110 a barrel, we're going to go to 122 a barrel, which is the 786 of the whole range. And that means from the whole range from 144 all the way down to $31 a barrel, and then the move on up to the upside. Now, if we take a look at part of what crude oil produces, and that is the gasoline futures, what we're going to do is we're going to take a long-term view of the gasoline futures, because all of us use this. And as you can see, we've had a tremendous move off of this low that we had around $2.46 a barrel. We were talking about this just a few months ago when gas here, in the United States, some of it was under $3 a gallon, and now we're approaching $4 a gallon. So this has exceeded all of the retracements from the high of 2008 to the low of 2009. We've already exceeded, and we're trading above the 786 retracements of that level. So that's telling you that this market is relatively strong. Yeah, duh. Yeah, anybody can figure that out. But it does mean that, if you're going to short something that, it looks a little weaker than this. This one looks real interesting. Now, the question is whether we'll double top up here at this 350 per gallon level. But that just remains to be seen if that is going to be the case. But, we had a really beautiful bottom there at $2.46, and we've rallied all the way up now. We're trading at $3.25. And so this is what it looks like as far as the overall energy section. I know there's a lot of talk about the Israelis and also Iran and Iraq. They've been talking about that ever since they mined the first oil, I believe, or drilled the first oil well. We've been going through that all through the those of you that lived through the late 70s when we had the long lines of gas where you had to wait in line to get gas. It was really really a pain to go through all that, and it was really something that was really not a lot of fun to go through if you had to wait for gas all the time. So this is, one of the things that we're looking at. Now, the overall price of oil, affects our economy somewhat, but the standing economic thought is that if the price of oil is up, it's because people have money in their pockets to buy the oil and production is good, and so people are willing to spend a little bit more on this particular commodity if that is going to be the case. Now, I'm not promoting any of that because I'm just basically a technician. I really don't understand, the supply-demand economics, even though I went to school and studied it. I still couldn't make any sense out of it, and that's one of the reasons why I don't use it. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, good afternoon, folks. This is Larry Pesavento for the Futures Hour. What we're going to be talking about now is the live cattle market. We've had a tremendous bull market that started last August, and since we had the big bullish Gartley pattern that came in late December, actually early December, at the 61 and 50% retracement levels, we've had a strong move to the upside, and we expanded up to the 1.618 level, up at that 130-150 level that we talked about 2 weeks ago, and we've had pretty good correction. We gapped down, and now we're going back into that gap. And this is another example of if you wanted to find a place, if you wanted to be short cattle, all you have to do now is to wait to see a 61% retracement in cattle. That would take you up about another penny or so to the 128.50 level per pound, and that's what we'd be looking at. Folks, let me give you an idea of where cattle prices are. Back in the late 70s, when I was at Drexel, we were trading cattle and hogs, very, very actively because we had inflation, and the housewives went on strike, and they wouldn't buy meat or beef or pork. In fact, any meat. They wouldn't even buy hot dogs. And they went on strike to try to get prices down. Well, it only worked for a couple of weeks because the demand was so strong. But when they went on strike, prices were at $83 a pound. I remember that very vividly because I was in those markets, quite actively. And I remember them, complaining that they got to, $83 a pound. Now, just a few years ago, just about 3 years ago, hogs got down to $44 a pound. That was below the cost of production. And we talked about this on the show that, this is the kind of place where you really want to be able to start to look at this. And that's one of the reasons why we're watching natural gas, is because it's come down for 21 years. And when things are down in that area, they usually have a tendency, to have some pretty good moves. Very similar to what happened in the Japanese yen and also the U.S. dollar. If you remember how, Tom was, yelling about King Dollar when it was, 73, now it gets to be in the 80, it got to be 82, and then everybody realized that, maybe something is, really happening. So this is what you're trying to do, is when you're looking at pattern, is to be able to see where these places are, where support and resistance come in. Now, when you're looking at a pattern and you're looking at resistance based on price swings of expansion. And what we're looking at is expansions of 1.27 and also expansions of 1.618. These are the numbers of the Fibonacci sequence, expansion numbers that we look at. And once the market goes above the 1.618 level, it's in no man's territory as far as what we're concerned. And this is why we want to be really careful when we're doing these things. But right now, the cattle market looks like it wants to get up to this 128.50 level. We'll cover that next week when we we look at it a little bit. And when it gives a little bit more time in to look at it. But right now the cattle looks like we're going to correct down to at least the 121 level, on this particular move, and we'll see if this is going to be, what we're looking for. Now, I did want to briefly talk about rice futures because they have moved very little. I mean, I know it's not heavily traded, like all the other things that we have. But it's still a very big market. It's the most staple food of all the world. And more people eat rice than anything else. And we had a big head and shoulders pattern that we talked about quite a few times on the air. And then we've come down and we've stopped at this 786 level for well over 2 months now. So we're either making a really big place for demand to come in, or we're getting ready to break down to the downside. So the question that I have is, why hasn't rice futures rallied with the soybeans and the corn? And the reasoning behind it really doesn't make any difference. The fact is that people are just not willing to pay for rice here, and they're willing to pay up for the corn and the beans. That's the bottom line. So what we're trying to do is to find a pattern where we could enter and not risk an arm and a leg. And the ideal place would be if we could get the rice down to about the 12.90 level, down about $1 a bushel from where we are now. Then that would be the ideal place, to take a look at the rice futures. Now I know rice is, no one's ever traded rice. Most people eat it, but no one's ever traded it. But what we want to do here is to take a look now at the Treasury bond market, because this has been the one that everybody keeps asking me about, because this was going to be my trade of the year. And we've certainly missed the high by several points. There's no question about that in my mind. We definitely missed that. But what we want to do now is we want to try to prepare to see what's going to happen, from where we are right now. Now, we've had a really bad break. We came down and looked at the lows from last October, and we broke below the 137. Actually, the level that I warned everybody about was at 140, and you can see that on the chart if you go into Tiger TV, that once you broke below 140, you were breaking support from the last January. In fact, this past January, and so it was telling us that this market was getting ready to go down. Now, if I've in fact have missed the top, then what I want to do is to be able to buy the first correction back. But here's my plan. I am going to be watching the markets very, very close. Well, I watch them closely all the time. But we are over such big cycles, folks, with this. It's not just the Bradley model here. There's a lot of things that are occurring. We have the equinox coming in on the 20th. We got the super new moon coming in on the 22nd, plus a whole bunch of other cycles. There's another big one on the 19th, which is a Saturday, I believe. No, that's a Saturday. That's Monday, 17th, 18th. That's a Monday. So, that'll be an interesting one to watch. So we're over a time where there's going to be some pretty big surprises, but we'll have to just wait and see if that's going to be the case. Now, I did want to let you folks know that I'm going to be taking a break from the radio show towards the end of this month. Probably, I believe it's my last show is going to be on the 26th, I think. And no, my last show will be on the 22nd of March, and then I'm going to be off for a month. I want to treat myself to these markets. I trade a lot. I need the rest. I'm not a spring chicken anymore, and I think this is an opportunity like we had in March of 2009 when things were making a bottom. I think we're very close to something that's going to be, very dramatic. I hope it's dramatic on the good side, but no matter which way, it'll still be a lot of fun to do it. But I want to focus my energy on that and make it, make it really worth everyone's while. I'm still going to be in touch with everyone through the newsletter and stuff, and that's, the main thing is that we want to be able to see how these things work on a place where I really have to just get really focused into, where we want to be, on a longer-term basis. Now, on the Treasury notes, and by the way, I don't know if you realize this because of the yield curve, is that the 2-year notes are trading at under 0.4%. In other words, the government is lending money people for 2 years, and they are paying 4%. Now, why anybody would buy anything like that for 0.4%, remains to be seen. But that's the same thing I said, about the about the long-term bonds. Why would anybody buy a long-term bond for 30 years and only get paid, 2.8% on that? So the short-term rates are starting to change a little bit, and so we'll see if this continues. Now, that usually means that people are really scared when rates are that low on the near end, but no one seems to really care right here, so we'll have to just wait and see what happens. Now, I want to give you a little refresher here, because the reason why I've been bearish bonds all this time, starting in, when we got up to this 145 level, I was almost positive that they were going to make 150, and and they might still, but we've completed a major bearish butterfly pattern in a pattern that has been going on since 1981 is when it first bottomed, and it's had 1, 2, 3, 4, 5, 6 different swings of more than $20,000 during that time. So these moves are huge. But this chart that we're talking about, this 30-year T-bond continuous futures chart from 1981 to 2011, tells us that we are topping in other words, the interest rate market is getting ready to turn. In other words, rates are going to go higher. So if you're interested and you're getting ready to buy a house, now's the time to lock up a mortgage, in my opinion. They're still under 4% for a 30-year and still under 4% for 15 years. So if that's the case, then I would take a real close look at this, because it looks like, we're ready to get ready to move, substantially, higher in interest rates. And remember, the other thing that we talked about on this show before is that the long-term interest rate picture, going back from when our country was formed, going back to 1790, it's only 14 years after we were formed, and that is, shows the interest rates have had these tremendous swings, and they hardly ever stay at a low level or high level for more than just a few years. And we've been doing this now for several years, staying up at these very low rates. Now, I understand that the Federal Reserve is playing games and everything, but frankly, it doesn't make any difference. It's the market that determines this, in my opinion, and so I really believe that we're getting ready for these rates to go where, the low we've had so far has been under 2.8%, and I think we could get back to 7 or 8%, just on a small rally, so this is what we're looking at. Whether that'll have anything to do with the stock market or not, I really don't know. All I know is that we are at a major, really critical level in this particular interest rate environment here, and I think it's important that everybody pays really strong attention to this. Now, I've only got about another 15 minutes on the commodity show, and I wanted to talk a little bit about the stock index futures, because we are at a very critical level in the Bradley the stock market model that we've been showing all week long, so that's not a surprise to everyone. But I wanted to go back And, I've looked at every year of the Bradley model since I started looking at it, which was 1886. And I wasn't born then. I just looked at the data. And the Bradley model in 1987 was giving a very strong sell signal coming into August the 24th of that year. That was the high. It was made on August the 25th. It was a thing called harmonic convergence. We had 5 planets all lined up with conjunctions, 0 degrees. They were all in the sign of Leo, and that led to what ended up being the largest crash in the stock market's history. I am not talking about a crash here, folks. I'm just telling you the Bradley model is turning down now, and it stays down now for all of 2012 and all of 2013. So just be careful up in here. I know it looks like it's real easy because Apple's going up forever, and but we'll have to just go and just wait and see if this is going to be a really true bull market, and the Bradley inverts and it goes up absolutely forever. Now whether it does that or not, I'm not sure. All I'm telling you is this is the time to be very, very cautious. Now I had a question about the trade of the year. I wanted to buy the TBT at $16.80. It only got down to $17.92 was the low, and now it's well above the 21 level, and so it looks like I've missed that. If that's the case, then I'm going to give it a few weeks just because of where the Bradley model is here, and then we could have some prizes. We might get one more jab up, which would be a really scary one, and that's what I'm waiting to see if it hasn't happened. Now, my second alternative is, and by the way, this is going to be my last trade of the year. I had too many questions about it, so it's just been it's just a pattern. That's all it is. It's not based on anything more than that. These patterns and cycles that I look at in the past, they've worked pretty well. This would, if I don't get filled in the bonds, this would be the first time that I've never gotten filled in a trade of the year. Of the 15 years that I've been doing them, this would be the first time that I actually wasn't able to get a fill. But we'll have to wait and see if, in fact, it happens that way. I was also thinking of maybe doing a secondary trade of the year, and of course that would probably be in the stock market because of where we are, with all the indices that we're looking at, and I don't really, I look at the Nasdaq only because of the divergence and the fact that Apple is crazy. We'll wait and see. Anyway, we've got a call all the way from India. Oh my goodness, Nellie, are you there?
Hey, Larry, how are you? This is Sunil.
Hi, how are you? What can I do for you?
Well, we have chatted a lot on the email, so I just thought I'll give you a call and say hello.
Well, thank you. It's good to talk to you.
Same here, and we thank you very much for all your great service on the show. Always enjoyed it and always enjoyed your newsletter. It's a wonderful newsletter that I've seen, so learned a lot from it. So I really appreciate your wisdom and, just wanted to thank you.
Well, thanks a lot. What can I do for you today?
I'm an old friend of Tom for the last 15, 17 years, so I've been there for a long time with him. So, well, let's talk about the market, SPX. Where are we going now? Almost in a parabolic move. I know we have completed several patterns.
Well, we've gone above the patterns in the 7/8 in the SPX, but with the New York Stock Exchange Index, we have not, done it yet. We're right at there right now. We're still trading at this level. I'm basing everything on the cycles that I'm over right now. Today's the day of the Bradley date, of the Bradley stock market cycle. We have another date coming in on the 19th, which is Monday. And so sometime between now, the 15th, and all the way out to the 22nd, which is the new moon of March, is where I'm expecting the market to begin not just a turn, a major bear market. Stay with me, Nell, and we'll talk more about it when you get back, okay?
Sure. Yeah.
Okay, thank you.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, Nell, are you still there?
Yes, I'm here, Larry.
Okay, go ahead.
The cycle, the Krell cycle, right? The Krell cycle, that's also turning down, and that is making a low in 2016. So
that's a little bit longer than I look at, because I'm more of a trading cycle person, and that's one of the reasons that the Bradley, makes it easy to use, is because if the Bradley is pointing up, you want to try to stay long, and if it's pointing down, you want to try to find a place to be short. And now, we're coming into this big day, today and, in fact, the next few days. And it's the exact mirror image of what happened on March the 9th of 2009. That was the end of the world. Everybody thought, the stocks were going to go to zero. They might even close the exchange. And now, the whole world is, extremely exuberant. Bloomberg reported today that it was the highest positive index for the stock market since 2008. That was not a good thing in my opinion, but we'll have to wait and see. I could be 100% wrong here, and I'm wrong a lot. So I'm going to know here in the next week or so if this is going to be correct. But boy, we're going to come into some real interesting times here very soon, I believe.
Yeah. And what do you think about gold in that case?
Well, the gold, they run differently, but, gold has had a pretty good break off of the 61% retracement up there at the 1770 per ounce, and we came down, yesterday we got down to the 1638 level. I still believe we're going to get down to about 1585 in the gold, which would be the larger retracement coming off the low of 1536. But if by some stretch of the imagination gold goes below that 1520 level that we made several months ago, that's going to be a really, really bearish sign, in my opinion. The fact that they couldn't get above the 61% retracements on both gold and silver made it exactly. So, it's telling me that these are still, heading to the downside, but, it's still, we're still in a trading range, basically from where we were in December to where we are now.
Yeah. Well, thank you very much. I appreciate it, and we'll stay in touch through the newsletter.
Well, thank you for the kind words, and I'll tell Tom that you came into the room. He's on vacation this week, and I will tell him that you came in. I appreciate it. I have a lot of students from India, and it's a really special place from a karma point of view, that's for sure.
Well, sometime you got to visit here, so we can meet here. I was in New York last month myself, but it was just a week or so.
Nice.
I've lived in the U.S. for almost 20 years, and then I decided to come here, actually.
What city in India do you live?
Pune. It's off around 150 miles from Mumbai. So.
Oh, okay. So it's basically a suburb of Mumbai almost.
Yes.
Because I know that's a very, very large city. Well, thank you for calling in, and have a wonderful weekend, okay? And let's see if this cycle comes in like we think.
Yeah.
Oh, yes, I'm going to be around. Yeah, I'm going to be here for another week or so, and then we're going to see what happens. And if I'm wrong, I'll have to, wait and see what happens, with this. But,
I love your report, every Monday morning. So.
All right. Thanks a lot. I appreciate it.
Take care. God bless you.
Okay. Anyway, we're ending up here now. We've got just a few more minutes. We've got the weekend tomorrow. Well, tomorrow's Friday. I'm not going to be on the show tomorrow. So we've got the next cycle date. This is the 15th. We have another one on the 19th, which is Monday. I'll be on the show on Monday. And then we have in fact, the whole week is a big one next week. We have the equinox on Tuesday. That's the 20th. And then we have on Thursday, we have the 22nd, which is the new moon, and I really expect there to be something really dramatic happening around that time. In fact, the Bradley model is not perfect, and what's lining up like it is now, folks, you got to respect it. Everybody, have a wonderful weekend, and may God bless.